Hey guys, welcome back to another video. In this video, I'm going to be talking about Epam Systems, and as we can see right here, this stock hasn't been doing that good over the last year, pretty much just broke even, while the rest of the market is up 26%. So it is underperforming the market a little bit over the last year, but nonetheless, we're going to look into the company's business model, their financial results, and then also value the company using a DCF model so we can know if the stock is a good buy at the current share price. So to start off, the company's business model, Epam Systems is a global provider of software engineering and IT consulting services. The company makes money through a variety of services aimed at businesses looking to develop, test, maintain, and support complex software systems. The primary driver of this company's profit comes from its custom software development services. This includes designing, developing, and implementing software solutions tailored to the specific needs of its customers in a wide range of industries like finance, healthcare, retail, and technology. In this area, Epam helps companies take advantage of big data by designing and implementing machine learning algorithms for smaller companies. Epam also offers consulting services to companies looking to enhance their digital footprint and technological solutions. By offering expert advice, Epam is able to charge customers a fee to assist them in achieving their business objectives. Epam also works with major cloud companies like Amazon Web Services, Microsoft Azure, and Google Cloud to help smaller companies migrate to the cloud and implement the scalability and cost benefits of cloud computing into their companies. Lastly, Epam forms partnerships with clients to co-develop new products, creating additional revenue streams through royalties and shared patents. Now we can talk a little bit about Epam's financial results. As we can see right here, these are their financial results for the third quarter, the period ending September 30th, 2023. They had total assets of $4 billion at the time, total liabilities of $8 billion, and total equity of $3.3 billion, with retained earnings of about $2.4 billion sitting on their balance sheet. So this obviously shows that Epam relies more on equity financing as opposed to taking on long-term debt from financial institutions to finance their business operations. Also, I didn't touch on this in the business model, but a lot of Epam's workforce and their consulting centers are located in Russia and Ukraine, or they were originally. So this stock took a pretty big hit earlier on in the last few years, but they've since managed to recover slightly and divest a lot of their business operations out of Europe. So right here we can see their revenue for the third quarter was about 1.1 billion, which is down 6% from 1.2 billion in the third quarter of 2022. And we can also see for their earnings results right here, net income. They had net income of 97 million, which is down from 156 million year over year, a decrease of about 38%. And then lastly, if I go to page number 8, we can see their cash flow statement for the first 9 months of 2023. It showed that they had operating cash flow of 391 million, up from 278 million. They also repurchased common stock of about $128 million. So even though they were repurchasing common stock pretty heavily, their share price wasn't able to reap the benefits, but hopefully it'll be able to reap the benefits of their strong share buyback program in the future. Now we can see the financial results for the fourth quarter. This is for December 31st, 2023. We can see they had total assets of $4 billion and then about the same equity and liabilities as we saw in the third quarter. We can also see right here their full year results for the 2023 compared to 2022 and 2021. Although it doesn't say it here, for the fourth quarter, Epam had revenue of 1.1 billion and then they also had net income of 97 million. The fourth quarter revenue was down 6% year over year, and the fourth quarter net income was down 37% year over year. For the full year, we can see they had $4.7 billion of revenue, down 3% from 2022. And then they had net income of 417 million, which pretty much breaks even with their results in 2022. So it looks like even though they had slightly lower revenue, they were able to produce pretty much almost identical net income, which shows that somewhere along the line they spent less in their operating expenses and also experienced less of a foreign exchange loss here. Then if I scroll down to page 63, we can see their cash flow statement for the full year. They had operating cash flow of $562 million, and then they also repurchased about $164 million of common stock. A part of their divestiture over the last few years was probably the fact that they weren't repurchasing much common stock because they were so focused on getting out of Russia and Ukraine, but it looks like they might be picking back up on repurchasing common stock, which could have a positive impact on their share price in the near future. So now I want to use this DCF model to calculate the intrinsic value per share of this company so we can know if it's currently trading at a good buying opportunity from a value investing perspective. Right here we can see growth rate. I'm using 23% for the next 5 years because that's what it was for their free cash flows for the last 5 years. In 2019, free cash flow was $190 million, and then in 2023 it was $530 million, which means that compounded annually, they had historic free cash flow growth of 23%. And then to calculate the DCF or the discount rate for the DCF model, I used a weighted average cost of capital of 10%. I got that using this model right here. I usually go through this in detail in every video, but for this video, I'm just going to skim over it, and then you can look at the details right here for yourself for how I calculated this WACC metric. Then right here, we can see they had cash on their balance sheet after subtracting debt of about $2 billion, and they have a very low share price or amount of shares outstanding at about 57 million shares. So that means that currently their estimated intrinsic value per share is $296, which means that they're actually basically trading at their intrinsic value per share here of $302 per share. So if you wanted to buy Epam at a good buying opportunity, then the current share price might be a strong buy based on these estimations here. Now I wanted to do an industry analysis comparing Epam Systems to their two main competitors here, Accenture and Genpact. Accenture also offers consulting services, and so does Genpact. We can see that based on this, it looks like Genpact has the best profit margins out of the three companies, and they also pay the highest dividend yield, and they're trading at the lowest PE ratio. So from a financial ratio perspective, it looks like Genpact is the best company out of these three. Lastly, I wanted to compare Epam Systems to the other companies we've looked at in past videos. We can see Epam Systems currently trading basically right at their intrinsic value per share here at about 100%. We can see the other companies right here that were trading below their intrinsic value per share. A couple of oil companies, a couple of tech companies, and then also a grocery store and a restaurant chain, surprisingly. And so on the right hand side here, we can see their growth rate, or the growth rate table here. They come in 10th place with 23%. Not bad for Epam Systems. They don't really pay a dividend, so they don't get onto the dividend yield table. We can see the top 10 companies we've looked at here based on dividend. 3M at the top, a couple of well-known dividend companies, Coca-Cola and Pepsi, and then McDonald's at the bottom. Then right here for gross profit and net profit, Epam had gross profit and net profit of 28 and 8. Not good enough for these tables. These are some companies we've looked at that had the best gross profit margins. As we can see right here, Adobe, Eli Lilly, Nvidia, Microsoft, and companies that had the best net profit, Microsoft, Meta, Eli Lilly, Apple. Then we can also see companies ranked based on their year-over-year revenue and earnings growth for the third quarter and fourth quarter. Looks like Epam Systems wasn't good enough to get onto the third quarter table, but they were good enough to get onto the fourth quarter tables for now because we haven't really looked at many companies for the fourth quarter. Although I imagine they're probably not going to stay on there because they didn't really have good revenue growth or earnings growth. They had revenue and earnings decline of 6% and 37% for the fourth quarter, We can see some companies that did really well in the fourth quarter and also in the third quarter here, but unfortunately Epam Systems wasn't one of them. Then lastly, we can see stock performance over the last 5 years. It looks like Epam Systems is only up about 89% right here. This is right where Russia invaded Ukraine right here, and then we can see stock price absolutely plummeted. So if you purchased Epam when they were down to $198 per share, you would have experienced a really good share price return by this point, up basically almost 100%. So that's actually a really good return. And I actually did make a video about Epam Systems at this point, but I unfortunately didn't buy any shares of the company. I wasn't completely sure that they would return to a higher share price because of the big hit they took from the geopolitical affairs, but they were able to make a pretty strategic, successful rebound, and their share price did improve. So congrats to anyone who purchased shares here, but I unfortunately didn't, so it sucks for me, I guess. But yeah, we can see based on that, they don't get onto the stock performance table here. Tesla had the highest at 850%. So let me know in the comment section down below what you guys think of Epam Systems. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.